retail stocks dominate the headlines. It's fair to say that the picture's been pretty mixed with our fair share of standout upside and downside performers. Over the last month, the consumer discretionary sector has been a relative underperformer, and the same can be said of retail names outside of the large cap world. If you look at the SPDR S&P Retail ETF, that ticker XRT, it tracks a wide part of the industry from small to mid to large cap stocks. We took a look at the index members that have made large upside or downside moves in the shorter term. There's nearly 100 names in the index, and some of them have rallied so strongly that they're now around 20% or more above their average price over the last 50 days. Those names include Best Buy, Groupon, and Urban Outfitters, to name a few. Now, on the flip side, there are some stocks in the XRT that are still well below their shorter-term average prices, and they include stocks like Dollar General, GNC Holdings, and HSN. So the question now is whether there's at least a shorter-term trade on a reversal of these trends, or is the momentum sustainable? Remember, we do get another notable report for retail out of Lululemon next week. So, Melissa, we've still got to keep an eye on retail earnings just a little bit longer. Back over to you guys.
Thanks, Don. Have a great weekend. Despite the big moves we've seen in some of these stocks, Carter says there could be trouble ahead for the retail sector. What are you seeing, Carter?
Sure, just following what Dom said, just a perfect setup. You've got these almost schizophrenic moves. Typically, the ones that have come to life have been laggards or losers, and then leaders are faltering. So we've got hyper rotation within the sector and yet no progress. So similar to what he was doing, just take a look at some of these names and look how big this is. Nordstrom up 17, all on a 1 month basis. 16, 15 for Dick's, Tiffany 15, 16. Names you all know, right? Tempur-Pedic, Guess, Urban. I mean, big moves. And yet, with that help, you're still not moving the aggregate. The consumer discretionary sector and XRT in particular not progressing. So I want to set it up with the overall sector, the XLY. What we know is we've got just to a slight new high and we're struggling. But as that's happened, one could say, yes, I did well, I made money. But sort of at a professional level, if you will, or if you're running a fund, it's a disaster of a pick. Up half as much as the market. This relative performance is a big problem. So up on an absolute basis, but up considerably less than the market. That's the XLY, the whole sector. Then subsector within that, here's XRT. In fact, the ETF that Don was talking about, it's got 96 components. They're all equal weight. It's Walmart, it's Amazon, it's the whole thing. And so we know that consumer discretion is underperforming the market, and XRT, a subset of consumer, is underperforming the consumer discretion. Not good action. That's after Best Buy and Tiffany all gapping up and producing points, but not moving the aggregate. So long-term chart, you can draw the lines however you want. The first thing I sort of thought jumped out was this, a clear trend line. We've responded to it beautifully. We responded to it and we undercut it, and now we tried to get back, we failed, and now we're struggling onto the trend line. I think that's what's going to happen. You could draw your lines this way for those who want to name their patterns, something of a head and shoulders top. So where to? Here is your sort of here and now chart. I think you're going to basically fail. You're stuck at all this, and then it's going to basically break this trend and head lower. So whether you look at it in the short term or the long term, not good action, not good relative action, and we've had a lot of contributing strength, and it still hasn't helped the story.
All right. So, Mike, you've actually got a trade. You also see it going lower?
Well, here's the thing. I mean, look at all of the names in this space. I mean, basically, the thing that has propelled most of them higher has been it's not nearly as bad as we thought it was going to be, which is a very different thing than it's really great. The only good news I thought in the Best Buy story, really, I mean, their same-store sales hung in there, but the truth was the 24% online sales growth was the one meaningful piece. But it's not that meaningful when you consider that ultimately they're still competing with the Amazons of the world. And the situation is how much of their revenues are still coming from online. The growth is not necessarily enough to make up. It's got to make up everything that they're doing basically in, before they become an online showroom. And so I think that's definitely a problem. And the same is true for everything else in retail, whether you're Macy's or Nordstrom's or Tiffany's. You face those same secular trends. They are not your friend. And then Dom was mentioning Lulu, which comes out next week. Now, I always use my Holly index for this because she loves to buy things at Lulu. And actually, I haven't been seeing that on my credit card receipts lately. So maybe that one, the one that I've had to support all along because it met my Holly index, even that one, I'm wondering. And it's trading very close to the all-time highs.